You're overweight on equities, bond, and also gold. We're going to get to that gold thesis in a second. Based on the Fed minutes, we appear to be moving closer and closer to a cut. Does the idea that we could not only be moving towards a cut, but possibly a rate-cutting cycle, does that change your view, your investment thesis at all?
Hi, Frank. So our view has been that the Fed will be able to cut interest rates, and I think it is highly likely to begin in September. But what we think is that currently the market pricing probably priced in a lot more than we probably think it should be. Because if you look at the pricing for the end 2025, is almost a 100 basis point below where the Fed projections are. And I think if we don't get a recession, if we just get a modest economic slowdown, probably that many kind of rate cuts is not warranted. But I would agree, yeah, we are at the start of the cutting cycle, and historically that should be beneficial for both bonds and equity. But at the moment, we don't want to be more overweight equities or more overweight bonds because of the priced-in situation already.
Right. And again, you believe that we are on path for a soft landing, but at the same time, recession odds have increased. So we mentioned this already. On Friday, Jay Powell is going to speak at Jackson Hole. Big potential market mover there, but also coming up next week, less than a week away, we have Nvidia earnings. I'm just going to run down some of the numbers for the audience. We don't talk about Nvidia as much as we once did, but still, huge influential stock. It's about 6% of the S&P 500, more than 7% of the NASDAQ 100. And I got this from our data team. The implied volatility after earnings is plus or minus 10%. Is this something that you have to adjust for? Is something you have to prepare for, these earnings from Nvidia coming up?
I think it's always very hard to position, particularly for one earnings result, given it could move either way very easily, very unpredictable. But what we think is that, we generally like the semiconductor sector, and we think that this is a very strong cyclical and structural thesis. And Nvidia is obviously the biggest stock in the semiconductor value chain. And I think, it is important to have, a position in that in your portfolio. And I also think that it's just not sensible to overreact to these earnings season. I think it's more importantly, if you have a view that these companies are likely to do well in the long term, just stay invested. And if there's occasion, like 2 weeks ago when there was a market sell-off, it could be a good buying opportunity. And we may actually see that again, given how volatile Nvidia stock is.
Okay, something to see. I mean, we've certainly seen some big reactions in the market to data points and other earnings. I don't want to classify over or under reaction, but definitely big reactions. One last thing. You're very bullish on gold right now. I'm looking at the chart right now. Gold's up more than 22% year to date, trading pretty close to a high. If we're entering a rate cutting cycle, why do you want to go to a safe haven asset, or why are you bullish on that?
I think that's a combination of the structural story and also fundamental story. I mean, we know that central banks have been buying gold, and I think that trend will sustain, because if you can check the surveys from the World Gold Council, emerging market central banks are still expected to keep increasing their gold as part of their reserve. So I think that trend is intact. And also we feel that, previously gold prices have been a bit detached from the fundamentals, as in real bond yield, but now we're starting to see that realignment again. And as the Fed is expected to cut, I think it's right to be positioned for an overweight in gold, given that they can benefit from both the cyclical and the structural tailwind that I described.